Welcome back. You're watching Stockwatch this week, and joining me to unpack your stock-related questions this afternoon is Gary Booysen from Rand Swiss. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Thank you so much for your time, Gary. Of course, I have to start off with CrowdStrike because there has been an outage, and this is actually a very interesting one because this is one that a lot of Stockwatch viewers ask about, the whole cybersecurity sector, CrowdStrike, Palo Alto. And, there's always, a positive sentiment from the analysts. What do you make of this outage? And do you think that it could fundamentally shift things in terms of how investors see them? Or it's just one of those where it's unfortunate, but it doesn't change the sentiment towards the company and the sector?
I think it depends on the ultimate reason and if there could be any penalties for CrowdStrike, because there's seems to be tenuous links to something that CrowdStrike has done that's created this global outage, what they're calling the largest IT outage in human history. But at the same time, I look at CrowdStrike just in pre-market trade, and there's almost no impact on their share price. They were down over 3% last night, but that largely seems to be in line with what was happening to the NASDAQ just around Donald Trump's comments earlier in the week that Taiwan should pay for their own defense and, or at least pay the US for their defense, and kind of indicating that he wouldn't have their back if China was to invade. So that kind of sent anything that had anything to do with chip makers, tech into a tailspin, and CrowdStrike obviously fell in line with that because it's seen as obviously a highly leveraged tech player. But overall, an outage like this, as long as it's temporary and it doesn't cause damage that litigation could end up against the company, then it should be pretty temporary. That's probably why you're not seeing any big move in the pre-market shares. But I don't know. Looking at it. CrowdStrike, obviously, they kind of deal with endpoint cloud identity and security, which is obviously crucial, to the world going forward. The more that we move our lives online, the more important online security becomes. And there's no question that they're the leader in this. They have a massive penetration into the enterprise space. And I think they are the name if you're looking for IT security. The problem, of course, is that they're incredibly expensive, and you can see that as with the rest of the tech sector in the US at the moment, a little bit of a wobble, a little bit of panic. I don't know if you've been watching the Russell 2000 this week, but any sort of rotation out of these kind of very concentrated large cap tech names, and suddenly you get these kind of 7, 8, 9% sell-off. So I think that's really the risk around the company. But if you can get in at a reasonable level, if we go through, if we see this kind of unwind, persisting over the next, let's say, month, and you see CrowdStrike down sort of 20, 30%, absolutely, I reckon you should be picking it up and sticking it in a portfolio.
We'll talk about picking things up, Gary. What I've noticed is that investors have been picking up Anglo American Platinum, and actually it's been bucking the trend in terms of what we're seeing in the other commodities plays. For example, Sibanye today is up more than almost 5%, Harmony down almost 5%, Kumba Iron Ore down 4%, Implats down more than 3%, Northam down 3%. But Anglo American Platinum has extended the gains that we saw in the share price yesterday. What story is this telling us?
Oh, it might be in the last couple of days. It's probably telling you a story that it hasn't reported as poorly as everyone was expected. So we're now expecting earnings to be down around 25%, and I think that was ahead of what the market was looking for. So looking at platinum, longer term, we understand that platinum is in this kind of like almost cyclical decline, unless we can find something to replace the demand that auto catalytic converters create. So as we move to kind of an EV-driven future, platinum is going to face less demand. At the same time, though, the market is expected to remain in deficit. So looking at the their kind of PGM sales volumes in the latest production reports, it looked decent. I mean, it wasn't terrible, and I think that's why you're seeing. I mean, obviously Kumba Anglo and Anglo American and Anglo Platinum all reported their production updates, and like I said, Anglo doing a little bit better than I think people expected. But certainly from our point of view, not out of the woods yet. This is still a very, very dangerous sector to be invested in longer term. But given the cyclical nature of commodities, given that these are high beta stocks compared to the benchmark, small movements are exaggerated. So kind of fun stocks for traders, if you want to put it that way. They've got these big exaggerated movements, but whether I'd be kind of, staking a significant portion of a longer term equity portfolio on the future of Amplats, I mean, it's difficult. It's a complex business, but I don't like the macro factors surrounding the sector at the moment.
But I mean, could this also maybe not signal that Amplats is, a cut above the rest when it comes to balance sheet and operations?
Oh, it's a good question. So, I mean, if you look at them, like they are typically more mechanized than some of the other platinum operations. So platinum in South Africa is quite a difficult thing to mine. You get these seams of platinum that you kind of go down. You have rock drillers lying at an angle trying to mine. It's a very difficult process to automate as well. So it's very difficult to mechanize platinum mining, which is one of the big challenges. That said, Amplats does have fairly high grade assets. Their mines are typically more mechanized than the other players. So because they've got kind of just a different style of ore body. So yes, maybe a cut above, but again, all of these platinum miners are price takers to an extent. Where the platinum price is going, if they all clubbed together and years ago made the cartel of platinum, maybe they would be price makers. But it's unfortunate that even though we have kind of 70% of the world's platinum, we've never managed to get that right. And at this stage, if the PGM basket is going to be under pressure, so are the stock prices, and that's kind of why we're avoiding for now.
All right. Well, something that investors have been avoiding this week is the telcos. There's a question here. At current levels, are any of the SA telecom stocks worth a nibble? Yeah, actually, I did ask JP and Drickus earlier on this week if there was anything in particular that was keeping the telcos under pressure. There didn't seem to be any specific reason. Is there anything that you saw why they were so under pressure this week?
I've also been asked that question a few times, and I also can't answer it. So it seems to be just the general malaise, and I wouldn't say even from an earnings point of view that our telcos are particularly expensive either.
Yeah.
With the GNU, I'd also expect a little bit of optimism around our telco sector. I mean, obviously MTN is operating all the way across Africa, and Vodacom is the strategy to move into Africa as well and internationalize some of the operations. But for example, Vodacom, Telecom, these are very domestically focused players. So I would have thought a little bit of support. But as I said, this week has been a bad week for markets. We've had this wonderful bull run over the first half of the year, and you feel like there's a little bit of profit taking, and the telcos just seem to be under the knife this week. Everyone's sort of looking at them going, these are obviously the things that we don't want to hold. But looking at the news feeds, looking at the kind of like the wire feeds that we get, there's no kind of major downgrades on any of them. There's no big news that should specifically be affecting these sectors. And as I said, like in earnings terms, not particularly expensive either. So you would assume that there's a margin to safety. These are not these high-flying AI stocks on 100 or 200 PE with these massive expectations of future earnings baked into their prices. These are fairly reasonably priced securities. So MTN probably a little bit more expensive given kind of what's happened historically in their earnings, but still, if I had to pick one of them, Again, it depends. If you're looking for something a little bit more stable, I would probably say Vodacom, nice dividend yield. But MTN for me has always been the pick of the telcos, just because if you're investing in something like MTN, you're trying to get exposure. I think it's the right stage of development to get exposure into the African continent. And if you're optimistic on Africa, you're optimistic on the demographic dividend that Africa is eventually going to pay, then telcos are a nice way to play it. But it's kind of a long-term thesis for me. And MTN obviously is buffeted by all sorts of things that affect you when you're operating in Africa, like huge fines from the NCC and all the other issues as well.
On that, Gary, because the second part of that question is what news is needed by the market for them to move up? Of course, you did mention the GNU, and of course, we're going to be looking out in terms of what the new Minister of Communications has in store for the telco sector. But do you think that even if we do get that going, the sentiment on MTN could change, even still with the headwinds that it does still experience in Nigeria?
Yeah, so like I said, MTN a little bit different because the GNU won't affect it as much as it affects the likes of Telkom
Okay.
or Telkom or Vodacom,
Yeah.
just because of their massive footprint, their massive subscriber footprint across the emerging market, specifically Africa. Like I said, MTN for me, South Africa is becoming a less and less important part of MTN overall, just in terms of revenues, or still critically important. Don't get me wrong.
Yeah.
If something goes dramatically wrong in South Africa, it still counts for about a quarter of their revenue based on the 2023 numbers, but Nigeria is at 36%. So
Okay.
Ghana's 10%, Uganda's about 6%. So you can see that they are well diversified. And like I said, for me, MTN is a play on the demographic dividend in Africa. It's generally the number one or number two operator in terms of the telco space. The kind of infrastructure and running a telco in a country is, if you're doing it right and you're efficient and you have first mover advantage, there's an incredible moat to a business like that. It's very difficult for someone else to come in and displace you. And as we hope, if you're optimistic, Africa becomes more wealthy over time, and as we see these economies developing, MTN should be well positioned to take advantage of that. But of course, these are frontier markets as well, and you're investing in something that comes with the risks, as we've already mentioned. It is going to be difficult to operate in these things, and every now and again you're going to get terrible news announcements out of these companies. But for me, MTN is I've held MTN for more than a decade, and we've been through the ups and downs on it, and I would continue to hold it. That really is my pick. Occasionally we opportunistic on Telkom. So Telkom goes through these periods where it's just way too cheap, and there's kind of opportunity for upside. But yeah, my core position has always been MTN.
All right. We'll talk about difficult operations. Pick n Pay is no stranger to this. There's a question here. And the viewer is asking for us not to laugh at this request. So how does a rights offer work, especially in the Pick n Pay sense? Just as simple as possible, I guess.
So how does a rights offer work?
Yes.
Oh, not how does this Pick n Pay work necessarily? Yeah. So again, rights offer is really easy. It's basically just a company that is trying to raise capital. So they're essentially issuing new shares, and they're opening it to existing shareholders, saying, we would like to issue new shares, but as a shareholder, would you like to participate? And there's generally a discount associated to essentially giving the company more money. So in the case of the Pick n Pay rights offer, they're raising around 4 billion. And the rights offer price essentially represents a discount of just over 32% to the ruling price of MTN. So what happens is, and what practically happened today, and you'll see the rights actually appear in your accounts. I was actually asked about it this morning because rights popped into one of our clients' accounts on Pick n Pay. So essentially what they're doing, it'll consist of, in Pick n Pay's case, it's around what's that, 500 million? Sorry, that's to go. But sorry, about 250,000 new shares, new irrenounceable rights that get put into different client accounts. This will be done in a ratio of 51.11 rights shares for every 100 Pick n Pay shares that you own. So you'll probably see 51 rights arrive in your thing, and then you either have to take up your rights or you can sell your rights in the market. So the rights actually have a value because it's essentially an option to buy Pick n Pay shares. Pick n Pay share price obviously goes down, but at the same time your rights then have a value. The one thing that you want to do as a shareholder is just don't let your rights expire. That's what you really want. You must either sell them in your account, or you must put in your election and say, I'm going to put more money in my account and I'd like to use them to buy more Pick n Pay shares. That's essentially it. Not complicated.
What's also been interesting is that because obviously this share has been under pressure at least for the last 2 days, but today it's picked up. Any reason for this?
Other than obviously the X rights, like the knock that you've taken on essentially the rights coming out of the share. Yeah, like I said, that's probably just market mechanics playing out,
Okay.
underneath, because you can now buy and sell the rights, and people are now looking at it and deciding. So now this is where the arbitrage traders come in, and they kind of look at where the rights are. You do the calculation, and you kind of see whether or not Pick and Pay is too cheap or too expensive. And depending on if it got knocked a little bit more, then the guys will just be pushing it up. But it's quite a simple calculation that you just run to work out where Pick and Pay should be priced based on where it was previously, and then if the market's priced it wrong, traders will come in and buy it up because it's essentially free money.
All right. Gary, last question before we go to your stock pick. What's your potential SA stock short or stock you are selling? Would you have a short, especially SA focusing, considering the optimism that has come through for SA Inc.?
I don't know if I necessarily have like a big SA short. Every now and again something looks like a short. I mean, we had a short actually on Pick and Pay. I think I published it in one of your magazines a little while ago, saying that I think it was 62 Rand a share at Pick and Pay. We thought, just in earnings term, that was very, very similar to ShopRite. You're paying kind of the same multiple for Pick and Pay as you were for ShopRite, and they were operationally two very, very different businesses. So a way that you could then exploit that is you would go long ShopRite, short Pick and Pay. You kind of create what's called a pairs trade, and it's a way of playing the relative movement between two shares, and it's a market neutral strategy. But typically, like these days, I'm not as much of a trader as I used to be. I'm much more of a long only equity manager. So every now and again we'll spot stuff like that, think, okay, that's worth having a short. But looking at the market at the moment, I don't know if I've got any company that I deliberately say I think that company is garbage and there's no future to short it. So I don't have a short for you necessarily today, but.
Okay.
But it's every now and again you come across them, but it's not really what I'm doing anymore.
All right. Well, where are you going long? What's your stock pick for today?
Okay, so I'm going offshore with my stock pick. Most viewers probably haven't heard of it. It's called CoStar Group. And the way that I kind of came across it earlier in the week is we're looking at obviously the thesis that interest rates are going to fall in the US. That generally is good for the property sector, and we up until now have been slightly underweight property in our global portfolio. So we're looking for an access point to property. So I was kind of running all our screeners. We screen for a whole lot of different things. We've got a quantitative approach to this, and CoStar Group came out, which is actually very interesting. So it's not actually a property company. It's essentially a data vendor around property companies, and it's represented. It's got a data set that they've built over the last 35 years in the US, almost exclusively US focused. But it's everything from aerial footage. They've got thousands of analysts that work for them, essentially trying to value and understand exactly what specifically in the commercial real estate sector, but in all sorts of in residential as well. And they have this huge data set and these tools that allow property brokers to value them. They are the premium tool in the US. So in South Africa, you can imagine it as Lightstone on steroids. Yeah. So if you're looking at buying a property in the US, or you're a US property broker, you cannot actually operate your business without them. Now, there are obviously a lot of concerns around commercial real estate in the US at the moment. But if you look at, you can kind of think of it, as traders will know, as like a Bloomberg or a Refinitiv terminal or a Morningstar terminal for the property market. That's what they're giving you. At the same time, they've also recently acquired homes.com. And if you can think about what they're doing, they're going to take it and they're taking all of this data set that they have around property, and they now have a front end that can sell directly to the retail market and essentially act as an online estate agent. They're also investing heavily in AI. So what will happen is, if you can really look down the line, and they're not saying this, but you can kind of see the direction the company is going in. If you can actually displace the estate agent totally from the process, and a retail person that's either renting or buying a flat can come directly onto homes.com. You can get all the information curated for you. You can put in your wants and needs, and you can have an AI essentially manage the entire process for you. That's where I think this company will be in 10 years. It's not particularly expensive because it kind of gets lumped in the real estate sector. And real estate has obviously been under a lot of pressure. But looking at it, it's got decent coverage overseas. It's a strong buy, and I think worth adding to a portfolio.
All right. Well, thank you so much for your time and for your insights and analysis there, Gary. Really, really appreciate it. Do have a good weekend. That was Rand Swiss's Gary Booysen.